Hello, trading is closed on May 24th, 2016. Yesterday we said there was a wall of selling into the close, that often this would be followed by gapping up. That happened and we satisfied the ultimate target from May the 20th. I said if we took out this high it could be a very strong rally today, and that's what happened. During the day in the afternoon, MEJT gave a sell signal that was satisfied. Here's the target, and there was support under it. There's an optional target most likely to print tomorrow of 2068.43. If it doesn't print tomorrow, I'd forget it. But last year these optional targets printed 95% of the time. Not 100, but 95 is pretty good. There are a number of things in this chart today which are not positive. First of all, we have a hole in the wall gap. These things tend to fill, usually pretty quickly. If it doesn't fill tomorrow, the tendency is that it'll fill by Thursday's open. Doesn't always work, but it works often. We have a stilt with a handle sloping up. This tends not to be a sustainable pattern. You'll see here the pattern happened and we corrected. We had the same pattern here, a stilt. We sloped up all day and then gave it all back. We also have a lovely measured move from this low. There's today's rally. And you'll see it's a pretty good measured move from here to there to there. This is a pattern which typically closes at the high of the day when we can't even close over the middle of the day high. It usually leads to lower prices. It would be negated if we promptly took out this high, ideally by gapping over it. There are some sentiment indicators which aren't too good. We've went over the top Bollinger on the NASDAQ. But the VXO, which is the original VIX volatility index, is now under its lower Bollinger band. There's no signal till we reverse, but if we reverse, it's a sign of a top. This is also a pattern of mine I reported about 15 years ago. It was common in the early 2000s, but I haven't seen it too much lately. I call it the coup de grace because it tends to be the end of the up move. Now the same pattern works for drops, but let's talk about the rules for an up move. Right from the open there's a strong rally. There usually isn't a gap of that size. I'm hoping it doesn't make a difference. The key point is for the whole first hour we have a steady, unremittent advance all hour long. Pullbacks are not allowed, consolidations are. No pullbacks, buy. As soon as the second hour starts, we hit a slightly higher high, and then we go into a long funk where there is a long, narrow trading range. The longer and the narrower the range, the more reliable the pattern. By 2:30 Eastern Time, the pattern is set. What typically happens is one gets a rally in the last hour. The commonest times for it to occur are right at 3 o'clock Eastern and also a rally right into the close, but those are optional times. They don't have to happen. This doesn't have to be the high of the move. I've seen it go 2 or 3 points higher. I'd be suspicious of the pattern failing if we went too much higher than that. It's a negative pattern. It tends to mark the end of the move. I'm not certain of the reason, but I believe what happens is that this is a sentiment indicator that here in the first hour when the public dominates trading, they have no inclination to sell at all. After the first hour they pull in their horns. The professionals are not of the same inclination. There's still no one who wants to sell, but all of a sudden there's no one who wants to buy. As the last hour approaches, and most people have packed their things and gone home, the public decides to rally the market again. Serious money would have moved well before that. The rally typically stops short. Usually the tighter the range here, the less move up we get. And then early tomorrow a drop starts, and taking out these lows kind of confirms the pattern, and it leads to a drop lasting several days. It's been a pretty reliable pattern for me, but if we go sharply over this, the pattern fails. Nothing's going to work every time. So tomorrow's call is we have an optional target of 2068.43. Oh, I should say that just because we retrace, it doesn't mean we aren't going to go higher ever. If this count is correct, and if that's wave 2 of 3, and that's an A and that's a B, a wave C down would be the end of this rally. It wouldn't mean we can't go higher at all, but it certainly would imply we'd undercut 2025.91. And that would also satisfy this MEJT target too. Anyway, the call for tomorrow is an optional target of 2068.43. If we don't take this high out in spades by over 2 or 3 points early, I think we could be in for a drop. I think the drop could last several days and take us down into the 2020s. And that's today's call.